Hey guys, Boris Schlossberg from BK Forest. Great to be with you. As always, please note the following video is for education purposes only. No claim is made as to the accuracy or efficacy of any trading strategies contained in this video. And as always, do your own research. So this week, really interesting week for me as far as trading goes. A lot of different approaches, a lot of different nuances to my flow trades. And the title of this week's video column is really going to be about discretionary flow. That is, how do you develop a structure, a system, a methodology that many of you, of course, follow me on Twitter with, and then add a little bit of a discretion to the methodology to see if you can improve the structure of the strategy. It's a very dangerous thing to do, by the way. I'll grant you that. I think once you start screwing around with the underlying concept, you can really deviate very greatly from your original thesis, and that could be very dangerous. But at the same time, if you monolithically follow every single one of your signals, you're also going to run into the wall quite a lot. So there's kind of a fine balance between trying to stay disciplined and at the same time, I think, trying to stay discretionary. I don't know if I really was able to achieve that balance this week, but I wanted to show you a couple of the ideas that I traded. So Eurodollar this week. Some classic trades. This was a first miss of the week where I sold the 42.50s and just got stuffed back on the trade back to 45. But very quickly, and this is, I think, is a critical thing, the flexibility of my mindset this week was very good. I very quickly flipped over the position and took the 43 to 43.25 move. Then I took the meat of the trade, 42.350 to 75 move. In a couple of other accounts, I actually took the long scalp, which worked very well as well. And let me see, did I have this here? Yeah, here this was actually a long scalp. I'm sorry, I took the long scalp, which took a long time to develop. It took almost like 12 hours to develop. And then the next day after that, I was gone. So I missed a lot of the trade on the 29th, especially the Greek vote. But when I had come back and I saw that the Greek vote had passed, we saw a lot of resistance at the 45 level and just a modicum of profit taking. When the German retail sales came in very poorly, I thought, okay, I'm going to sort of deviate from my original idea, which is to always sell the 00 down to 75 or sell the 50 down to the 25. And I'm going to just front run the idea, and I made a discretionary trade here to the short side, which worked very well, which was the short of the euro around 80s into the 60s after the profit taking came in. Notice, however, this is the other interesting thing. I was very cautious about following momentum on the counter side in this particular structure, because ultimately the news on the euro side was good. Risk was clearly positive once Greece had voted for the austerity measures, and Trichet affirming over and over and over again that he's going to raise rates. All of that was basically net euro positive. So my discretion to stay out of this tick to the 50 was a wise move to do. And I think that's kind of a thing you sort of have to learn as you go, that the setup itself is simply a structure for trading. It really requires your own wits, your own ability to analyze, to refine it, to give you good trading ideas. Now, I'll tell you this. You may have a lot of wits, but you may also have a lot of idiocy, because certainly I followed that up with a lot of idiotic trading afterwards, because today's trading, I really basically just escaped with my head almost handed to me on the platter. I took the 45.50 breakout very early in European session. This is a critical mistake also. Generally, you never really want to take the early breakout. You only want to take the breakouts that happen after 4 a.m. New York time, which is 8 GMT time, because that's really when the equity session begins, and that's when the real trading begins. The early squeeze that happens just sort of suckered me into a trade. The thing that I did probably that worked out well, but probably was a poor choice in my opinion. I was pretty adamant that the euro trade was going to be net risk positive, especially because we had relatively good risk flows overnight. We had I'm trying to remember what it was that I thought that made me think that. Basically, I thought it was just going to be I really didn't have actually a very good idea for a fundamental idea for why I thought the risk was going to be risk positive. I guess I was betting on the fact that I also thought that the UK PMI was going to be better than expected, and all that I thought would contribute to relatively good tone. Of course, none of that happened. Actually, the fundamental data was sort of very negative. But I thought all of the moves to the downside were just short blips. So I pulled my stop from the 45 and pulled it all the way down to 75, just barely escaped it. Then redoubled my trade by taking the 45 to the 25, and then finally stopped myself out when it came back down on the momentum move to the downside. So net, I basically lost 25 points in this particular trade. I could have lost 50, and I really could have lost 100. So when you look at it in retrospect, it was kind of very stupid type of trading, and I was able to escape just by basically staying true to the overall trend. And I think if there's anything you can extract out of this is that I was really trying to trade on the larger time frame. So I got lucky, but really not what I would call great execution on my part. Then, of course, I got a little bit eager. I really was confident that the ISM number was going to be good, and I thought that was going to be positive risk. So I got a little bit eager, and I took the next blip up at 45 ahead of the ISM. Huge mistake, because this is one of the things that happens very frequently and something that you should really keep an eye on. If you have positive U.S. data, the knee-jerk reaction very often in the euro is actually negative, right? It assumes that it's pro-dollar for about 5 seconds, 5 minutes, about, I don't know, 30 minutes of a time. So you had this knee-jerk sell-off reaction in the euro. Again, I made a discretionary unilateral decision to pull my stop all the way down to 44.25 because I thought this was a BS reaction. I knew that ultimately this was net positive euro, not net positive US, if we had a recovery theme coming up out of the ISM data. And sure enough, after the knee-jerk reaction to the downside, it did recover, and I was able to get out at my classic, run through the zeros number at 45.25. So overall, I can't say that this is really a poster child for great discretionary trading. But there are moments there that I did have some intelligent trades. There are moments there where I just simply got very lucky. And I think, the statement is luck favors the prepared mind. The only thing I can say in my own defense that kind of played in my way is, again, that I traded on the side of a larger trend. And if you're going to make stupid mistakes, at least you should make them on the larger side of trend. I want to show you a couple of other ideas of how you can use flow in discretion in a whole bunch of different ways. Generally, I almost always trade it in euro-dollar, but you can also trade flow on sort of a fundamental basis. There were a couple of examples of this. We had a negative GDP current account data that came out a couple of days ago, and I came out on Twitter. I said this data is negative. If it breaks 59.50, I'm short. I did take the short. It was a beautiful, just plus 25, nice, smooth flow trade that ticked out. What's kind of interesting is that in my own do as I say, not as I do methodology, we had horrendous PMI data out of UK. The knee-jerk reaction was to the downside. We had a short blip to the upside, and then I said on Twitter, we're going to target 160 under threat, meaning that if the 35 was going to be given, which it became given actually very quickly, right? I mean, in other words, we had the reaction here, rallied all the way up to like the 30s, and then it came back down to the 60s. If that, sorry, am I pointing? I'm actually pointing. Sorry, excuse me. I'm pointing to the wrong trade because here was a trade. We had the move on negative PMI here, a retrace back up, and then a move back down into the 60, as I thought we would have, given the fact that this was negative data. So this was a classic case where I could have taken a breakout at 25 with a with a stop at minus 50 for its 160 target. It could have made the money. I just simply didn't follow my own advice. So you could trade the flow within a new structure very well, I think, as long as you have the right new structure, the right price structure. That is, the price is confirming the news thesis and allows you to try to hit those targets. Good example of just sort of thematic flow that I traded properly, and this is probably the only trades that I think I should pat myself on the back for this whole week, were the Euro-Swiss trades. And actually, if you notice that I really missed the whole big move, the natural trade when Greece voted for austerity measures was to get long Euro-Swiss, because the Swiss franc was just basically a single monolithic bet on the destruction of the Eurozone. So once that threat basically was gone from the table, the Swiss franc was for sure going to weaken. And as you can see, you could have taken the breakout of 50 to 75, the long scalp. Every possible flow trade would have worked in the Euro-Swiss. I joined the wagon very, very late. I take basically the sort of the long scalp move here in the beginning of the European session. Then we have a retrace. And again, On this particular situation, I basically bet on the fact that the ISM is going to be strong. And again, I take a long scalp with very little downdraft here. There's maybe 20 points of downdraft against me. Of course, I had a stop here. I was long at around 70. Stop was at the figure targeting 2,300, and I made that very easily. So the point being is that there was a lot of different ways that you can trade my setups. The one interesting way that I want everybody to sort of take a look at is going to be in the BK Forex Advisor feed itself. Starting this week, anybody who is a subscriber to BK Forex Advisor is going to be privy to my private flow calls on our private Twitter feed. So if you're interested in joining BK Forex Advisor for all of the regular BK trades, for all of the Kathy's news trades, we're going to give you one other reason, yet another reason, to want to trade with us, because I'm going to take the flow trades into a private Twitter feed, and I'll be trading them in a classic fashion on a day-to-day basis. So hopefully you guys will get a chance to see this trading in action, not just in post-trade analysis, which is what I try to do primarily over here. Wishing you guys the best of luck. Happy July 4th to everybody in U.S. and just a great weekend to everybody else across the world. Any questions, any details, don't hesitate to post on Twitter at FXFlow or email us. Talk to you later. This is Boris Schlossberg from BK Forex.